please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Asian markets, they are off to a flying start, positive, even as the US-China trade wars continue.
Chance of further short covering, especially by the weak bears. The weak bears would run for cover. For the strong bears, I think they would be waiting for this move to fail.
The message that we are getting from our sources is that while the government is vigilant and weighing its options, it will only act when it feels appropriate.
76 point higher is what you have on the Nifty.
2019-20, you could again have 15-18% type of earnings growth.
I won't be surprised if nothing is done this weekend. I think that may well be the appropriate strategy.
Turning out to be a good session for us, so we are seeing some amount of stability. Come at 4.53%, so that is even lower than what our poll was estimating.
Market is up 114 points. It's about 7 points from the high point on the Nifty.
Good afternoon. Thank you for joining us on Closing Bell. It's been a tale of two halves again this week, and what we saw on Monday and Tuesday, the exact opposite has played out on Wednesday and Friday, close to the highs of the day. The market pretty much mirroring the currency's tunes, and I suppose a lot of optimism, Sonia, as we're getting into this all-important weekend meeting and what that might throw up.
Well, you know, that's the thing, right? I mean, not too many people are expecting anything from the meeting. All it could be is a macroeconomic review, and the government themselves have said that, you know, they may hold their nerve this time around. So I don't know what people are expecting. Maybe it could just be a short covering rally.
Exactly.
After fall, we've seen 2 days of a short covering rally will not really hurt anyone, and I think that's what the market is playing out.
Perhaps, yeah, and I mean, you would have to be a very brave bear if you really want to keep your big short positions open, even if you're getting into the weekend with, you know, so much that's perhaps lined up ahead. Well, we'll be covering a lot of these cues as we go along. Let's tell you what's lined up on Closing Bell this Friday afternoon. It's been a strong day of trade. The market being led once again by some of the financial names. The rupee continues to stage a recovery as well ahead of the Prime Minister's economic review meeting. All that we will discuss with our fundamental experts, SP Tulsian of sptulsian.com, market expert Prakash Diwan and Devang Mehta of Centrum Wealth Management.
In this volatile market, what are the interesting sectors to look at? We are Siddharth Bothra of Motilal Oswal Asset Management Company.
The Cabinet Secretary-led high-level empowered committee is meeting once again today. The committee has been constituted by the PM to revive stressed thermal power projects. We watch out for that and get you a heads up.
And as always, our technical experts will take you through the key trading strategies for the last hour of trade.
Okay, so let's actually get started with that. How should you look at this market in the next 1 hour? We have with us Rahul Mohinder as well as Prakash Gaba joining in on the day's strategies. Good afternoon, gentlemen. Thanks for being with us. Rahul, let me come to you first on this. I mean, the sort of move that we've seen over the last two sessions and today as well, fairly steady, holding on to most of the gains. What would your call be on the indices now if you have a trade and, of course, individual stocks?
I think the big worry is this a corrective rally up, as you were earlier mentioning, and I think that's really the big question. I pointed out 11,480 this morning as the key resistance. Yes, we kind of have hung up around that level. We've not been able to successfully stay above it, but let's say we do sustain above that level and we move to about 11,600 odd. I would still say that there is that possibility. However, I would not conclude this to be a big breakout on the upside unless we close past 11,480, unless we get above that convincingly.
Okay, so still need to be convinced to, you know, for a few days perhaps to see whether this breaks out or not. For now, it's just a short covering rally. Prakash Gaba is also here with us. Prakash, hi, good afternoon. Would you concur with that view that, you know, it's just a short covering move that we're seeing? I mean, you were making this point earlier in the morning as well. But till when do you see it last, and what would you do by the end of day today?
Good afternoon, Sonia. Well, we have seen an up move. And we were on Wednesday, we were expecting some kind of, oh yes, today what we are seeing is purely a short covering. This had a technical target, which I mentioned in the morning, was 11,460 to 11,516. I think we are still okay as long as that holds. I have a feeling that even if we do get a dips, those are not our worries. In fact, I would say dips are better, and perhaps we can see higher moves in the days to come. So I would not worry really. It can go up higher from the days to come.
Okay. By the way, some news on Ashok Leyland. Maybe we should pull the intraday up on that stock. Single-decker AC buses. That's the kind of order that they have got from the Bangladesh Road Transport Corporation. So that stock is spiking up a little bit on the back of that news point.
Actually, this is a segment that has done very well for Ashok Leyland, over the last many quarters. And Bangladesh is a key market for them. Their market share has also been going up there. So I think that's the reason why you're seeing that spike up in the stock as well. And Aisha Motors earlier in the day was telling us that their market share too in the buses, in the buses segment particularly. So a lot of state government orders coming in.
Okay, so it seems the buses segment is really wheeling in some good gains for these companies. And that's a stock on the day's high now, Ashok Leyland. Really making a big move now, actually, that one. Let's get some stock trading ideas in then with our experts. Rahul, what are the picks you'd go with for the last 1 hour?
I'd look at Vedanta. I continue to like the stock. I mean, I would say that if one is willing to hold this stock for a few days, you'll see 246 come in. I'd buy it with a stop loss at the 225 mark. We've got to remember that the last 3 or 4 weeks we've consolidated between this 210 and 230 level. So a lot of volume which has got blocked into this level. I'd be very interested to see if this breaks out into something biggish and we have a much larger kind of breakout. But for the near term, Vedanta for a 246 target. Another one would be Apollo Tyres. Here too I'm taking a buy stand. I've seen a lot of volume accumulating again. 253 would be a potential price target on it. I'll keep a stop of 233.
Okay, Prakash, your individual trading bets.
I like Shriram Transport. I think I like the base formation here. Looks like it's heading up. If not today, then tomorrow. Target on the upside on Shriram Transport is around 1,250. Would have a stop below 1290. Oh, sorry, make a mistake here. Target is 1250, stop is 1190.
Okay.
And second is I like UPL, looks good, can climb to levels closer to 745, stop below 726.
All right, well, thanks a lot for that. We have SP Tulsian of sptulsian.com and we have Prakash Diwan who joined into our conversation. Gentlemen, afternoon to both of you. Mr. Tulsian, your words resonate in my ears. You were telling us earlier in the morning that you would use every dip in Shriram Transport as a buying opportunity. You're optimistic on the stock. The stock is in fact up almost about 3.5% right now. For a long-term investor, it still makes sense to buy at this point, you think?
That's right, Sonia. In fact, in the morning when I've said post that, if you see the management clarification having come in of that NCLT proceeding or maybe the insolvency dragging to SVL Limited is in respect to 6 to 7 crore. And that is not going to get contested and as the MD of Shriram Transport has hinted, it's likely to get settled, though that will get handled by SVL. So taking all this into perspective, I think when we got this opportunity, when this SVL issue came in of the guarantee, and I recall when the share fell to the same level, in fact it is giving the same kind of opportunity. And in the morning I have said that if you really see the situation going forward on the earning fronts, the core earnings are seen to be very much in place with EPS, expected EPS of 105 to 110. So obviously that is giving an excellent opportunity, and in mind it that Shriram Transport is seen to be a high beta stock, which swiftly gets covered its losses also. So I won't be surprised to see the share moving back to a level of about 1290, 1280 to 1290 in this series itself, closer to about 1300 or so. So yes, keeping the positive bias on the stock.
Okay, that's a view on Shriram Transport Finance. The market, by the way, not quite able to break above 11,500 in a hurry. But it's holding on about 111, 115 points up on the Nifty. That is what we have going for ourselves. Prakash Diwan is also with us in the studios this afternoon. Prakash, good to have you back. So, suddenly, it seems to be like it's all hunky-dory. We will only find out, I think, on Monday. But your thoughts on the kind of recovery that a lot of big NBFC stocks are making. They've been beaten down quite a bit with bond yields moving higher. But for instance, Indiabulls Housing Finance now, Bajaj Finance for that matter. Are these good levels to get in?
So, the same question I had answered 2 days back, and for Bajaj Finance, it was a very unequivocal yes, because, we mentioned about the fact that some of these quality NBFCs will not get so upset by, the kind of cost of funds that was anticipated to prevail, for them. See, look at the way they get themselves funded. Look at the way their business model is prone to passing off the higher cost of funds to the borrowers. The differential in an EMI for a Bajaj Finance customer is just a few rupees if the cost of funds were to be higher, predicated at 8.15 bond deals. So what I'm saying is, but we, when things are bad, when they're looking bad, everything looks really worse than what it is. And that's where we, kind of painted all of them with that dark brush. And this is more of a bounce back, which is on the back of the fact that the rupee is stronger. And there is expectation that there's some economic revival plan or package would welcome us on Monday morning. So as you said, whether this continues till Monday or not, that all depends on that big expectation that's been building on this thing. So this is not a hope rally, this is an expectation rally. And I wouldn't be surprised if some of these stocks which have suddenly been, like Indiabulls Housing, case in point. I mean, is that really, something which is warranted? And my question is maybe not. But some of them like Chola, Shriram Transport, Piramal Enterprises definitely would kind of, find some better values than what they were 2 days back. So I'm not saying this is a great time to buy. You need to buy when there is panic, not when there's exuberance on the street.
Yeah, that's why my next question to Mr. Tulsian, the exuberance that we're seeing in the sugar names. Balrampur Chini is up about 18% today. Mr. Tulsian, we were speaking to management earlier in the day, and Vivek Saraugi did talk about how increase in the ethanol pricing is a big positive, etc. A lot is being done there. But you think it's just purely short covering that we're seeing in some of these sugar names, or do you think even from an investor standpoint, it still makes sense to buy?
See, Sonia, let me just quickly explain again, which I've in fact said on Wednesday afternoon show only, that there are three molasses, molasses A, B and C. And in fact, in molasses C, which is the conventional method, where you derive 4.5% of the sugarcane crush, which is getting processed into ethanol. In fact, there the ethanol prices have been reduced from 43.70. It has been marginally reduced by about 20 paisa to 20-25 paisa to 43.46 per liter. Now come on molasses B, because let me again quickly take molasses A. Molasses A is not the concept which is available in India, where you cannot directly make the sugarcane juice entirely into ethanol, so forget that. Also come on molasses B, where 20-35% sugar is extracted, and that molasses B is used, where the prices have been increased from 47.49 to 52.43 per liter. That means the increase is about 10.5%, while the market is feeling that the increase has been given at 25%, which is wrong. Now come on molasses A. For theoretical purposes, the ethanol price has been fixed at 59.13. And in my view, that will just remain academics, because as I said, that molasses A, you are not making any kind of entire sugarcane juice is not getting converted into ethanol. We don't have that kind of technical machineries or the setup available. So that is theoretical. So effectively, there is an increase of about 10% in the ethanol realization, which is in fact, if you make the conversion, 1000 kilo of sugar can make about 600 liter of ethanol. I'm just trying to put the technical things into a simple terms, which I have explained on Wednesday also. So that is giving you an equilibrium realization or an equivalent realization of about 32 rupees per kg for sugar. And next year, the crushing season, which will start in the November, are going to see the production of 35 million ton. And mind it that if the 35 million ton sugar is produced, the domestic prices will fall to 27-28 rupees, and even global prices will fall. So to avoid that 10 million ton of sugar, can get diverted for making ethanol, that means we will be effectively having a sugar production of about 26-27 million ton, which will be seen quite realistic, and we will not put any pressure on the sugar prices to go down. So on an equivalent basis, or as I said, that equilibrium is being maintained between sugar production and ethanol, with the realization seen at about maybe 32 rupees for sugar, and about 52, 53 for B ethanol. So taking that into consideration, the sugar companies will not make losses, and taking this into account, so much positive, I think is unreasonable. Maybe Balrampur Chini is having its own technical factor going out of F&O from this series, so the recovery, maybe the shorts are getting recovered, and even there has been exuberance. I am not saying that this will not result into the financial improvement of the health, because earlier it was expected that sugar companies will all make losses, which is not seen happening now going forward for the coming season. So that can be seen as positive, but I will be cautious. In fact, we initiated a buy call day before, after seeing the outcome of the government in respect to this ethanol prices. But once the clarity has come out, our advice is that wherever now the prices have risen for sugar stocks, mainly the UP-based sugar mill, it should be taken as a fair valuation, and we won't advise buying further shares. One can advise to hold the shares. I'm not saying that you book the profits also, but further buying at the current level where the Balrampur Chini has moved up by 16, 17, 18%, we won't advise initiating a buy call at the current level.
Okay, so a bit of caution now after the run-up that we've seen the last 2 days. In fact, some of these stocks have just opened out on the circuit now, and there's some selling coming in. Bajaj, Hindustan, Dwarkesh, a couple of these stocks. Balrampur itself, of course, off the day's high. So maybe some prudence is required, says Mr. Tulsian. We'll take a break on that note. On the other side, we will be discussing some interesting sectors that Siddharth Bothra of Motilal Oswal Asset Management likes. He manages their Focus 25 fund. So we'll find out what he has his eye on.
Hi, welcome back. It is the last day of what has been a truncated week. I was just trying to take stock of how the week has shaped up. It's been a nothing sort of a week for the market. So the Nifty is down 1% this week. The MidCap index is down about 1.5% this week. And if you're looking at stocks, then auto stocks have lost quite a bit. So Hero MotoCorp, Tata Motors, M&M have all fallen about 2 to 5% this week. Our guests are still with us. Prakash Diwan, any thoughts on how to approach a name like Ashok Leyland? I mean, they have been getting more orders, more bus orders coming in. Today, Eicher Motors also spoke about a 15% volume growth for their business. You think there's more to go in this space and in this name?
So I'll tell you, on Ashok Leyland, I mean, we've seen these, slices of good news coming through once in a while. And today you have maybe a Bangladesh order coming in for single-decker buses. I don't know why they're not called normal buses. And then you had some time back some EV, headway they made in the UK order and all. But, Sonia, the commercial vehicle segment is still got a huge overhang of the undecided replacement policy, the scrappage policy that is still on the cards. And any day that could come and spook the market the way you had the excess tonnage that was introduced, and we still don't know what has been the impact. I feel August was a slightly weakish month for auto sales. September could continue with that, and more so now the CV cycle could be topping out. While Eicher is talking about a catch-up because there is a market share shift that is happening in their favor. It's not an overall business complexion that's changing. And if Maruti were to introduce a smaller light cargo vehicle from their stable, all of these guys, Ashok Leyland and Tata Motors of the world, will find it extremely difficult to compete with that. Now, Maruti in the LCV segment, we've not heard, but they are planning to do this since a long time to cater to the e-commerce build-up that's happening. So the intra-city movement and the point-to-point distribution pickups and all. So that is going to be a big game changer. So I would be slightly cautious with the Maruti at these levels is still a buy. I mean, 8,500 was mouth-wateringly attractive. You saw some sales shift to the premium segment and things like that. But Ashok Leyland, I'll be a bit cautious at these levels.
Okay. That's a view on Ashok Leyland. More stocks on the move. Actually, the mid-cap market is doing really well. The mid-cap index is up about 300 points. Something like a Granules with a 10% surge, days high on that stock. So, quite a bit of a movement over there. There is EIL that is on the upswing, 5.5% up. Some of the mid-cap IT names like Hexaware, Mindtree, they are finding some buying traction today. Even a Walkhard for that matter, 4 to 5% up on Walkhard. So plenty of these stocks that are bouncing around. Mr. Tulsian, specifically a word on EIL. This company that they're buying, I mean, does it make any sense? I don't know what the trigger for the stock could be. Is it really such a positive move? Because otherwise the stock has been in the doldrums for several months.
See, Survi, before coming on EIL, I have been hearing this all analysis of the market that, it's a short covering rally and all that. So I just dug some of the data point, and in fact, if you see Bank Nifty spot has risen by 340 intraday, I'm talking, and the Bank Nifty future has risen by 250. That means the premium which was at the start of the day, which was seen at 180 points, has shrunk to about 70 points. Now, why this happens when you see the position, long position of the future longs getting shifted in the cash buying? And in fact, this was the anomaly which I was drawing, that this kind of huge premium, on Bank Nifty and Nifty future is seen unwarranted, and that's in fact happening because of the cash selling which we have seen. So now the cycle has turned. Now again we have seen the cash buying coming in. I won't be surprised to see the good data of the FI buying. In the similar way, the same thing has happened for Nifty future. Nifty future is just up by 110 points. Nifty spot is up by 125 points. That means against the premium of 48.50 point has shrunk to about 35 points. And that 35 points and about 70 points on Bank Nifty looks realistic 2 weeks ahead of the expiry. So this is a very good trend of the cash buying which is seen today in the market, where the positions are, because what happened till yesterday or day before, maybe for expiry management and all that, the strong hands had created the long positions in future and sold their cash holding, which is now getting converted. So this is again a very positive data point I just wish to draw here. Coming on Engineers India Limited, I think again it's just a value play catching, which you have seen corrections, but anything extraordinary or anything special, positive on the stock is not seen in my view.
Okay, Mr. Tulsian and Prakash, thank you for. Okay, thanks for joining us. Ms. Tulsian, thanks for joining us on the show and giving us your views as well. Let's welcome our next guest now. Siddharth Bothra of Motilal Oswal AMC joins us to give us his views on, his Focus 25 fund, the markets, and how he's going to approach fund management from here. Siddharth, hi, good afternoon, and thanks for joining us. I was just going through some of your key holdings. You do have a lot of auto stocks, that you've held for a very long time and made a lot of money on it, whether it's names like Maruti, Eicher Motors, etc. But this year, the auto sector has underperformed most of the sectors. It's underperformed its own, growth over the last many years. You think the tide is going to turn? Do you see any kind of outperformance going ahead? What's your view now on these frontline auto names?
Yes, I think I would agree with you that, the correction that we have seen in the last couple of months has again made many of these stocks very attractive. And, the underlying fundamentals of these stocks have never been in doubt. It's more, I think the valuations had risen a bit too much, and also I think the recent print numbers have been on a weakish side. But as we move ahead and, as the growth comes back, I would believe that they continue to look very attractive to us.
Okay. So that I was looking at the composition, your key holdings in the Focus 25, and it's interesting because you have a couple of insurance companies that you've gone in with. There's HDFC Standard Life, there's also ICICI Lombard. HDFC Standard Life just off late obviously is correcting now that the news is out and there's a new boss at the helm. But how are you looking at the insurance plays now, and where is the preference? Life, general? So what's your expectation from these holdings?
Yeah, so we've been bullish on the insurance sector for a long time now, and these two have been our key investment bets, both on the general insurance and the life insurance. We are positive both on the general insurance as well as in life insurance. I think in the near term, maybe general insurance post the new regulations which has come in has seen a lot more traction, whereas on the life insurance it's more a longer term play, and particularly a play where the term insurances continue to gain traction, and that's fundamentally changing the nature of many of these companies. And we believe that both these, the general as well as the life insurance are, bets you can take for a 5-year, 10-year kind of a horizon. And, both of them are probably amongst the top class within the entire sector.
Okay.
So we continue to be extremely bullish there.
Sure. Sorry, no, I also wanted to ask you about, you know, the FMCG basket, because you have created a lot of wealth in this space in the past. A case in point, you know, stocks like Britannia. I mean, we have seen these stocks come off over the last couple of months. So Britannia, for example, has gone from 6,800, I think now closer to 6,000. You think this is a good buying opportunity for long-term investors, or do you think that FMCG has played its part, run its course, and now it could, you know, see some underperformance?
See, many of these stocks, the core fundamentals don't change. They continue to, many of these segments are seeing strong growth, and the inherent management strength and all those things remain in place. But I think the key issue with many of these FMCG stocks has been the valuations. So at one time we used to have almost like 9-10% holding in Britannia. Of late, that weight would have come down sharply because we've not been incrementally buying. I think valuations still continue to remain a bit expensive. Other than that, I think if you give it due course to correct a bit more, then underlying stocks continue to remain attractive, and probably the valuations is the key issue right now.
But the valuations have been the key issue for Britannia for I guess almost a year now. So are you trying to say that irrespective of valuations, because fundamentals are strong, you should use it as an opportunity to buy?
No, what I'm trying to essentially say is that many of these stocks have seen valuations go completely haywire, and we have used that as an opportunity to partially reduce our stake both by selling, and we have also not been incrementally buying in many of these stocks. So in fact, what I was trying to say was just the opposite. That is, the valuations are still on the expensive side, and you would probably wait for some more corrections within many of these names to again start looking at buy opportunities there.
Siddharth, what sort of exposure to NBFCs do you have in the fund? The reason I ask is that we are living in an 8% plus environment. Cost of money is elevated. So what sort of NBFC stocks are you willing to hold or willing to even buy?
Yeah, so I think this is an environment where you need to be with the larger banks, with companies who have significant advantage on the liability side. So in case of F25, I think we currently have only two NBFCs. One is HDFC and the other one is Bajaj Finserv, where again, large portion of the value comes in from the insurance side. So we don't currently have any major exposure on the NBFC side as such.
Okay, no major exposure on the NBFC side. HDFC, Standard Life Insurance, ICICI Lombard. So basically insurance stocks is what you have exposure to. What's your view there? I mean, what kind of growth do you see? There's a lot of competition at the moment in the insurance space, but do you think that the growth rates will pick up substantially?
I think in case of life insurance, it's again one of those businesses which can continue to grow at 20% for a very long period of time. And in case of general insurance, again, this is a business which is more like a 15 to 18% kind of a growth story. But you must be aware that there's been a recent regulation change. Post that, maybe in the next few years, we'll probably see a higher growth. So both these businesses look set for 20% plus kind of a growth over the next 2-3 years to us.
Okay, should pull up one stock. What just happened to Peninsula Land? It just hit a circuit. 20% up move on that stock. Someone's come out and definitely looking to buy, at least the shares, if not the real estate. But yeah, that's what's happened to that one stock. A decent volume on it as well today. So these are some of the stocks on the move. EIL, we've mentioned that one's been doing well. Walkhard is piling on some more momentum, as is Granules. Balkrishna Industries is up and about. So there's a fair amount of, even Apollo Tyres for that matter. So a fair amount of movement in the cap market for the time being. Siddharth, sort of how do you look at, you mentioned some of the auto names. Is the ancillary space also something that you are willing to look at? I know with Focus 25, the mandate is fairly restricted. And I think the orientation is more large cap there. But any other manner in which you are willing to play the rural theme as we move closer to election season?
Right. So first on your question on the auto ancil, in fact, that's a segment which is looking attractive, especially ones, where the large component might be coming in from export side. So definitely we are looking at many of the auto ancil names, and we are open to those names. With regard to the investment universe of F25, you must be aware that of late the SEBI reclassification for all mutual funds were there, and now F25 is a large cap focused fund. So within which now the large cap has to be only around 65%, and for 35% we have full flexibility. So to that extent, this remains become a lot more dynamic fund as such, and you have a lot more flexibility within that. I think in case of your other question with regard to the rural consumption theme, I think there are various ways to play within that. So I think even stocks like Maruti and Britannia, they have large portion coming in from the rural side, and that's where they're seeing stronger growth. So I think that's probably one of the ways by which we are playing the entire rural consumption theme.
Okay, well, yes, these are stocks that have been in your portfolio for years now. So you have made quite a bit of money, although this year has not been so good for many of these, multi-baggers. But thanks, Siddharth, for joining us and giving us your views. By the way, the market is at the high point. So the highs that the Nifty saw was 11,499. We are at that point currently. Just look at that. It's been one stable move on the upside. No volatility through the day. No selling pressure. Great for the bulls. Let's see how long it lasts, though. We'll take a short break on that note. We still have about half an hour to go before the day and the week comes to an end. So don't go anywhere. When we come back, we'll get you buy today, sell tomorrow calls from our technical expert.